But let's start with the global markets. We had that US jobless data coming out, really positive for the market today. Why was it so important for the market?
Well, I mean, continue the theme firstly of the whole week with better than expected data out in the States. And on a monthly basis, that non-farm payroll and unemployment figures, those are one of the biggest figures that come out in the States. I mean, I looked at a graph of the non-farm payroll data over the last 2 years, and it's just unbelievable how it shot up over the last 3-4 months or so. So, I mean, it's obviously important if the consumer is losing less and less jobs, then they're going to be able to get some more disposable income and spend. I mean, the US market is driven by consumer spending. So, going forward, hopefully, we'll start to see even more of a recovery than we have been seeing so far. Yeah.
Analysts also saying that this could bode well for the GDP number for the third quarter in the US. Could be a positive number. So
exactly, there. That's just as I said earlier with regards to consumer spending. I mean, they're driven by consumers. The more people, the less jobs they lose, the more people are going to have to spend, helping the GDP. Yeah.
Now let's look at the JSE. It just managed to close up by 0.1%. Now it was trading down drastically earlier in the day. What helped? Was it this jobs data that helped to pull it up?
Without a doubt. I remember sitting there in front of my screen and seeing the data come out, and the Aussie just absolutely flew. Look, I mean, it came off its lows a little bit before that anyway. But as soon as that data came out, that was definitely the impetus for a move higher and a stronger close. Yeah.
Now we're definitely off our 18,000 low in March. And we're sitting at around 25,000 at the moment. Do you think we can be able to sustain this gradual tick up, or do you think we're going to start seeing a correction from here? Look,
I mean, I've been bullish for a while now. I just don't like the way that we've shot up in a straight line over the last 2-3 weeks, whatever the case may be. I would have preferred to have seen a case where we had 2 steps forward, 1 step back, a slow, gradual improvement. But as long as the fundamental data in the States and locally continues to improve, I guess, who am I to go against the trend and try and pick a top here? A lot of it has to depend on what happens in the States, especially in the Dow Jones. 9,500 is a very big level there, so we're getting quite closer now. We'll see what it looks like when you get there.
Now, let's take a look at the results out this week. We had banks reporting, Absa and Nedbank. What is your take on their results, and how are you playing these shares?
Well, look, I mean, pretty much as expected. We all knew that the first half of the year was shocking. They said so in their trading updates. Came in pretty much in line with expectations. A couple of cents here or there, that's not much to write home about.
Nedbank reporting a 93% drop in retail profits. So just indicating that the consumer is still in a bad way, and they're also indicating that corporate defaults could be on the rise.
Yeah, exactly. But I mean, as Tom Boardman, CEO of Nedbank, stated in the report, that they expect that the first half of the year was the worst in this whole credit cycle. Obviously, the consumer's been under quite a lot of strain with the high interest rates, and as we all know, interest rates only filter into the system a couple of months down the line. So these low interest rates should start helping, by the end of the year.
Now, Nedbank is trading down by 0.6% today, sitting at 108.95 Rand. Do you think this is just a reaction to its results coming through?
It didn't really move much on the results the whole week. From a technical perspective, 110 is a bit of a level. So there are a few sellers out there at that. I guess we're going to have to break above that quite convincingly now, purely from a technical level, again, I state, for us to extend to the upside. Yeah.
Standard Bank's reporting next week. They issued their trading update early in the month saying that their earnings are going to be down between 20 and 25%. Now, are you expecting a number around this, and do you think...
if the current trend is anything to go by, I'm not expecting any surprises there. Personally, they're my favourite bank with regards to their foothold in Africa. The Chinese bank having a good exposure to them. So yeah, I'm not expecting any major surprises in Standard Bank's earnings, to be honest truth.
Let's take a look at Old Mutual, trading down 2.2% today, trading at 12.31 Rand. Do you think this is a continued reaction to the fact that it's not issuing a dividend? It continues to be impacted by its US businesses. What were your take on its results out this week?
I thought they were okay. I didn't see any major surprises there once again. I like the fact that they've restructured quite nicely, getting out of Hungary, Poland, Czechoslovakia. And the restructuring of the US business also doing quite nicely there. So it looks like they've put the right structures in place to turn the corner. I mean, Old Mutual has done a lot to the upside over the last couple of weeks to the last couple of months. So for it to come under a bit of pressure for guys to start taking profits is no surprise to me there either. So I don't want to read too much into the results there with regards to this fall today. I think it's just a bit of profit taking there at the moment.